Setting up meeting. We're almost there.
Okay. Oh, we live. I see it
We're
on your
live.
page.
Perfect.
Yeah.
Awesome. All right, Mike, let me come back to where you are since you
Okay.
can actually see us. Oh,
Uh,
okay. We got somebody that's about to hop on. Okay.
yeah, I'm about to share it in a few groups.
Okay.
Too.
Awesome. Well, while you're doing that, let me go ahead and do the same. I want to welcome our guests. I'm not sure who's coming on, but I definitely want to welcome the guests. I'm gonna mute the lines out. Thank you so much for oh, that person did. They went ahead and muted themselves.
Okay. Alrighty.
Are we set? Are you good?
Yeah, I'm just I'm good. Let me see, make sure I got all my groups.
All right.
Group. I can't see.
See, we need somebody else just to do our groups and tag people, you know?
Yeah. It's all good. Yeah, I'm set.
You're good? All right.
Yeah, I'm
All right.
set.
All right. Well, I want to say, let me put my phone down. Mike, I want to say thank you so very much for being here tonight. It is an honor. It's a pleasure. So coming off of 2020, well, let me first introduce myself, and then I want to introduce to anyone who do not know who my special guest is. I'm Patricia Island. I'm actually the host of Late Night Conversations. And the reason that I put this format together, this platform together, is coming off of 2020, many of our life had to change in so many ways, you know, having to be in the house, you know, just really having to do things in a different way. It's just been really different. So I wanted to do something where on the weekends, instead of individuals saying, you know, what can we get into? Because now we have to get into things at home. We have to find a different way to do things. You know, and I know the world has kind of opened back up, but we still have to be safe. So I wanted to put this together so people can come on, grab your pen, grab your notebook, and grab some resources, grab some tools, some things that we can apply to our lives to be able to do things a lot better than maybe how we've done it in the past, because we may not never go back to the way things used to be. So for January, to kick off January 2021, you know, I'm like, okay, health and wellness is everything. Your health is your first wealth, but you also got to get your finances in order. So when I was thinking, I said, we are not going to go through January, step into February, unless I have my special guest tonight, my friend, which is Michael Mckenzie. He is a beast in what he does. I'm not going to sugarcoat it in any kind of way. And so I said, there's one person that I want to bring on before this month ends. And that's him, because people got to get their money right, Mike. They got to get their finances right. They got to make better decisions. We got to make, you know, better choices. And so all jokes aside, I wanted you to come on and just drop some major nuggets, you know, just share, you know, what you're passionate about, what you're good at. And so I'm not going to, I kind of said a lot. I'm going to let Mike introduce himself, give you all a little history. And then I have some different things I'm going to ask. Anyone, we do have one person that hopped on the Zoom. Anyone who wants to actually be a part of the live Zoom, I'm going to give you, actually, I will put it in the comment line. I'm going to give you the Zoom link. It's also on my page, and I think everywhere Mike may have shared it. But the actual Zoom meeting link is 853-5992-2286. And I'm going to go ahead. Mike, you have the floor. I'm going to mute myself.
Okay. How's everybody doing? My name is Michael Mckenzie, also known as Big League Approved. I'm a licensed mortgage loan officer with New American Funding here in the area. My NMLS number to stay compliant is 1683358. Um, I'm passionate about just building wealth. Very passionate about it. I used to have a 458 credit score. I got denied for a mortgage loan. I had a whole bunch of lates. I got student loans. So yeah, so you can get through all that. I have as well. So I just want to just inspire the next person to go out there and just build that wealth for their family, with their friends, for themselves. So let's get it. Let's get it popping.
All right, awesome. Okay, so Mike, so you started off, okay, let me let everybody know my favorite childhood game, my favorite adult game. If you all see Michael's background is Monopoly. So when Mike hopped on, we hopped on a little bit earlier than you all did. And I looked, when he hopped on, I'm like, oh my goodness. I said, we are so in alignment. Mike did not know on my, I have, some notes here. And the one thing I said is, he who owns the most real estate kind of controls things. And so I learned that from the Monopoly game. So for him to have that as his backdrop, I said, man, I know where he's going with that. So Mike, can you share that? And then I want to go back to what you said about your credit score.
Okay. About Monopoly. Oh, that's my favorite game to play. Growing up, my family they used to play it all night. I finally learned how to play it, and I kind of got the gist of the game. Like, hey, whoever owns the most property owns the board. And when I'm doing my business personally, it's kind of subliminal. That I'm throwing shots at the government because I'm building my monopoly. It's all about controlling the board. Um, and that's what you can do in real estate, especially right now with COVID. If you take a step back and really look at what's going on, real estate is winning right now. Stocks are too, but real estate is that's like the thing that's winning. And it's going to continue to win. And you can kind of just control the whole board by just buying that one house. You only got to buy your dream house. You could just buy that one house, put a Section 8 tenant. My motto is Section 8 ain't never late. And guess what? A lot of people might be like, oh, well, Section 8. Roy Cooper, our governor, he got these laws going on right now where, your tenant, you can't kick them out if they don't pay rent. But guess what? The government's still paying their rent. So I look at, my real estate business because I do rent to Section 8. I give them the best housing. I look at my situation like I have a contract with the government. They pay me every month to house somebody. So it's a win for me, a win for them. Because the government, what people don't realize, the government don't want to be in the real estate business. That's why when you own a house, especially investment property, you get different tax breaks and all that stuff. Because the government's like, hey, you helping us out, so we're gonna help you out. So a lot of people I talk to, they seem, scared about investing in real estate or don't know where to start. Just start. Just get in the game. Like you're gonna make mistakes, but you can learn from those mistakes. You can go on YouTube University. That's why I learned real estate, and then from my mentor as well. But a lot of it came from YouTube University. Then I met my mentor, and then you just learn and just do, because it's nothing. It's beautiful to wake up in the morning on the first or the third, log into my bank account and see that I made some money. And all I had to do was buy asset a few weeks ago or a few years ago. And you can do it.
Man, Mike, so this is like questions, and you covering
Okay.
so many of them. It's crazy. So I'm like, well, do I flip the page or? Okay, so first I want to go back um, to your credit score, the 485. So I remember one day when we sat down and we was talking, and you said to me, I remember when I was saying I'm a boss, and then you kind of, this is how you know somebody is hitting somebody to their heart and they passionate. And you said, I was like, how am I a boss? I can't even buy a house. My credit is shot. Remember when you told me that?
Yeah.
And because you made reference to it, you said my credit, you just went right into it. My credit was 485. I was getting denied. I was getting denied. And the true wake up, you're a man. So all my men out here, I want y'all to hear this. It's nothing attractive talking about you a boss and you a man and you can't even sustain yourself, let alone he has a family. He has a wife. He has two very cute little boys. They're into sports, and that stuff is not free. I totally know that it is not free. So you can't be a boss if you can't even do the basic things. And then to have a full family, and you're like, I know it could be hard for men. You got a wife, you got a girlfriend, you got children, and you might be trying to be the tough guy and the boss, but on paper you ain't no boss.
Yeah.
But you looked at me and you said that was a wake-up call for you. So how can you share with because I want to go into the tax breaks and all of that, and I know you share something on your page. Don't get your settle for a house. You want to get your I look at all of that, and a lot of us settle. We be like, oh, I got my dream house. No, you got the house that your money, the lender allowed you to get because you didn't get in the right position. So go over how gentlemen as well as women, how did you start? Because I know that you had your own credit restoration business. Can you kind of talk about, because before we get into investing, everybody doesn't have cash on hand. Everybody isn't in a situation where they can go and get a loan. So how did you work through that to be where you are today?
So what I did was, like, I remember it was like 2011. I applied for a mortgage. And the guy told me, like, I was all excited. I was like, yeah, like, I'm about to get a house. I was like, man, I sent you all my paperwork. I had a little job at the time in my business. And the guy was like, well, sir, I can't approve you. And I'm like, what you mean you can't approve me? I'm making all this money. I got a little job. My wife got a job. And he was like, you got a 458. I was like, that's good. Like, 458, man, I'm in there. He's like, no, sir. So with the mortgage lender, what he didn't do, he didn't tell me at all, like, what I need to do. He was just like, hey, I can't approve you. He was like, just work on your credit. He sent me like the basic videos. I'm like, okay, this is not really telling me what to do. So my cousin, he's a mortgage lender in Charlotte. And at the time, he put me onto this credit repair lady. And so the lady, I told her, I was like, hey, before I pay you, I want to learn. Like, I'm paying you to learn. I like, just don't fix my credit. Like, teach me. And so she was like, okay. So I was just asking her questions, understanding and learning. So after she fixed my credit, I was like, hey, can I come work for you? But I was like, I don't want to be W-2. And I was like, just, let me just be a contractor. Let me have my own credit repair company. And you just kind of oversee what I'm doing. So she let me do that. And more and more, I just started learning about credit. More and more. And then I had a mentor. My mentor, like, he's from Cuba. And I ain't gonna lie, he was a jerk. Like, I ain't gonna lie, he was a jerk. But I met this guy on the streets. Like, when I was going to Central, shout out class 2014 from North Carolina Central, the best class ever.
Wait, is it a class of bosses, Mike? Is everybody a boss like you?
Oh, class of 2014 at Central? Let me tell you, that's the year we won the MEAC. We had some ballers on the basketball team. The football team was good. Like, we got some bosses in that class. Like,
okay.
Like that class, we got some true bosses in that class. That class is dangerous.
Okay. Well, we should next time. I have to invite some of them on and share the wealth of what some of your other friends do. So.
Oh yeah, I got a whole bunch of them. Like, one of my guys, he's a project manager, super real estate investor. The other guy, he works for Johnson & Johnson, the only minority to run their marketing department. So it's huge.
Okay.
It's huge. Yeah. So I got some connections for you there. But
all right. So you say he was a jerk?
Yeah,
your mentor was a jerk.
Yeah, he was a super jerk. He was just like, man, like, how you gonna do credit repair but don't really understand how the banks work? I'm like, what you mean? Like, he was like, look, I'm gonna pay for you. Like he paid for me to go to bank functions, to
Okay.
like underwriting conventions, lending conventions. Like I'm in college, so like I didn't graduate with the highest GPA because I was like, I was missing class because I was at these conventions learning, rubbing elbows, shaking hands with bank managers, underwriters, learning guidelines, commercial lending. And so he sent me to these things and he was like, all right, you understand credit. Now let me show you how business credit works. So I kept going to these functions and he gave me a task. He was like, okay, now I want you to get like 3 contacts. And then here's the thing. He was like, where did he send me to? He sent me to Florida for a weekend. And he was like, look, I'm not gonna pay for your hotel room until you get 3 contacts.
Okay. That's a motivator right there.
That was a jerk move. But so like, you get set up. So I just got like a bag and I had to tell the guy behind the counter, like, hey, just hold my bags, man. Like, I got like a jerk. I gotta like do some stuff. I was like, I'll be back though. So I had to get 3 important contacts from different banks that could, just help him and help us. So I learned how business credit works. And that just took my credit repair business, it made it explode. Like if you all go back on my Facebook page, 2017, I was really talking about business credit repair, because I wasn't a mortgage lender at the time. Um, so once I understood how to get my credit up, um, it was off to the races there. But again, when people sign up for credit repair, they just say, okay, I'm in credit repair, but they don't want to learn. Take advantage of it. If you sign up for credit repair, ask your credit repair coach the questions. I really learn it, because I always tell my clients, when you go through credit repair with me, I don't want you coming back.
Right.
So
That's
it's
a
like,
problem.
yeah, like if you learn it, you can tell other people, and now you saving them money, because credit repair, it can be expensive, and it's just like, okay, you can pay someone to repair your credit. I get it if you don't have time, but at least learn. So if you feel like you don't want to pay anybody, you can just know, okay, let me just do this and that, and that's all I was doing. Like we was just teaching people and stuff like that.
Okay, so, well, thank you for sharing that. I know that there are individuals that I personally know that are business owners, and you have helped them, because I was listening to what you said, and you said, well, I got money. So a lot of times people don't understand you could be cash heavy, but you could be credit poor.
Mm-hmm.
So on paper, you cannot take cash. You have to show documented earnings. You got to show something on paper. So that's usually the flip side. And that was kind of your situation. Your credit was not where it needed to be. Now, exactly, I know this person, and I watch him a lot. Now, Mike is just like I am in regards, you say YouTube University. YouTube is so powerful. And I think a lot of times people uh, mistake YouTube for just, flipping through looking for music or movies. Like I have learned so much on YouTube that I'm like late night, I'm sitting up watching YouTube just learning. And one person that I came across through Earn Your Leisure, you know who Earn Your Leisure Group is?
Yeah.
Okay. Him 500 Marcus.
Yeah.
So Marcus taught, I was listening to him in my car and turning my 14-year-old on to him because something happened to me when I made a decision recently to really tap into getting my credit in order with the basics of just downloading Credit Karma. My score in the last 2 months have gone up 50 points. I look at my credit score every day like I look at my bank account.
Yeah.
Like I look at it like I brush my teeth. I look at it early in the morning. I'm looking at it and I get notifications, but I'm so excited about my growth to the point that, I'm like, you have to look good on paper. Eric Thomas talked about that when he said his team kept going saying they bought some land to put his new church somewhere that was in a rural area where most of us wasn't, and they kept coming back. You know what I'm.
Yep.
Go
I
ahead and
listened to
talk
that.
about. Go ahead and talk. So go ahead and talk about that, Mike. On paper.
So here's the thing. A lot of, I'm gonna just be raw with it. a lot of Black folks, minority, women, Black men, they always think that the Caucasian is not for us when it comes to doing business, banking. It's not that they're racist. They want your money. They want it. You just got to play the game. When it comes to banks, and this is not a race thing, but this is just how our mind is programmed. When it comes to banks, you can't be like, yeah, I'll take Cash App, PayPal. No, they don't understand that. They corporate. You gotta treat your business like it's a corporation so they can understand that, because they don't understand PayPal. I told my banker today, I was like, hey man, they don't understand Cash App. Because I told my banker today, I was like, man, look, Cash App. And he was like, what's that? I was like, Jesus.
Right, right.
Yeah, so when it comes to that, you want to be bankable. Just because I see a lot of people say, oh yeah, get an LLC. Congratulations, you got an LLC. That don't mean you bankable. You got to learn how to play the game and know what type of stuff. So the first thing you want to have your paperwork in order. You want to have your LLC and your EIN. There's people out here with LLCs that don't even have an EIN. The EIN is the social security for your business. Secondly, you want to do your taxes. And you want to hire either a CPA or a true accountant to manage your books. A lot of people are like, oh, I'm going to go to my cousin over here because they do taxes. They're going to give me a discount. When you decide to really become a business owner, it can change your life. It can really change your life. Like, you could really change your life if you do it correctly. Meaning having your books in order, hiring the right CPA, having the right attorneys. I got two attorneys. I got an attorney for real estate, and I got an attorney if I need to beat somebody up.
That's right. Oh my gosh, Mike. Okay. Well, we hoping that you don't never have to use the second one.
Yeah.
But I like the way you put that.
Yeah, and so a lot of minorities, they think, oh, they racist over there. Nah, they not racist. They just didn't accept it because you gotta have your paperwork in order. It's like buying a house. If you come to me and you don't got no bank statements, you didn't fill out the mortgage app, I'm gonna tell you, like, hey, come back when you feel like you're ready to be serious. Because they serious. Because the thing is, you can get the money, and a lot of people in 2020 got exposed with their LLCs when it came to these EIDL loans and these PPPs. Everybody's screaming, I want a PPP, but to get a PPP, you got to have a payroll. It's a payroll protection loan / grant that they're giving you. So just because you got an LLC, that means you don't qualify. EIDL, a lot of people wanted that, but guess what? You ran a whole business. You was a hairdresser. You were selling clothes, but you never LLC'd your business.
Right.
You just having people cash app you, looking at the quick check, missing the big check.
That's it. Right. That's it. Man. Okay, so Mike, because you dropping so many nuggets all at once. So the PPP, I got the PPP, and you're right. Your paperwork has to be in order, but I didn't get the other one because I don't have an LLC. So people think, like you said, just because you braiding hair and you doing locks and you got all this, you cash heavy, but on paper you don't show anything. You got to show your paperwork to be legit. Being legit can take you a lot further than trying to duck and hide and reserve. That's what that's what deductions are for. Tax write-offs. When you legitimize your business, you can now go back and start writing those things off versus let me hide this, let me hide this. Real talk, you all. So we're not gonna sugarcoat. Somebody might say, well, what you mean? Y'all, some of y'all know y'all out here hiding stuff and you're not showing stuff. So Mike is going to educate you all on that. Now, Mike, you talked about business credit. The one thing I have stayed up so many nights listening to. Well, I've heard it, but I like things to be imprinted on my mind, on my soul. So the one thing Marcus talks about is leveraging your personal credit to build your business credit, and stop using your debit card and using your business credit so you can use their money. You know where I'm going with that? So a lot of you all I don't say a lot of you all, some people don't understand. We think of having great personal credit for a rainy day. Every day is rainy, but it also can be sunny. Stop thinking, you want to get these credit cards so you can buy all this material stuff that depreciate in value, and then you're not using it to build wealth. So, Mike, can you talk about the difference between personal credit, business credit, and how you use, one or the other, and why one will take you further?
Yes. So going back to when I had a 458, the reason why I had a 458 is because I didn't have a credit card. That was like the number one reason why. A lot of people are scared to use a credit card because they don't understand it. Because they got burnt by it one time when they was younger, or yeah, pretty much when you're younger. Here's the thing. I got burnt by a credit card. It was First Premier credit card. Right now, my credit report, it still shows a collection. And I'm like, man, that's about 10 years ago. But here's the thing with credit. You want to have a credit card. I said the max credit cards a person should have, like max is 5. But my max is like 3. You just want to have 3 credit cards personal. But if you can have 5. Try to stay away from store credit cards. What I mean by store credit cards, Macy's, my fellas, I got a Best Buy card too, and I had to give in when I brought my house. I had to give in. They was giving me a little discount on a little refrigerator. But Best Buy is a good one, but try not to have too many store cards, ladies. Like I know my grandma, she got like New York and Company, Victoria's Secret. She got all the stores. I'm like, goodness gracious, Granny. So those store cards, having too many of those, it's just too much to keep up with. Like Kohl's, everybody love Kohl's. Kohl's is very tempting. But you want to just have, personal credit cards. And from your personal credit cards, the hack is this. I know a lot of people talk about the 30% rule, but a lot of people don't understand it. The 30% rule is actually the old rule. So you don't need that. It's the 15% rule. That's what you want. And this is how you figure it out. A lot of people say pay your credit cards like twice, 3 times a month, all these crazy formulas, right? You don't gotta, like, they're making it too hard. I be hearing these formulas, I be like, Control Alt Delete. It's like you're doing rocket science.
Right.
All you gotta do is just pay your credit cards on a due date and wait 8 days after to reuse them. So here's an example. If your credit score is a 620, let's say you have 3 credit cards. And let's say you owe on those 3 credit cards, you owe $5,000. Let's say each credit card has a limit of, let's say one credit card has 3,000 and the 2 other cards have 1,000. So you maxed out right now. So you're trying to figure out, well, what's the 15% rule? I'm pulling out my calculator. I use my calculator.
Wait a minute, calculator everywhere we go.
I'm pick on me. Like my kids' teacher's like, your son can't use a calculator. I was like, kidding me for that thing called a heartbeat.
We talking money. We can't. We got to make sure we got a calculator.
Yeah. So this is what you want to do. You want to do 5,000. You want to do your total limits is 5,000. You owe 5,000. Well, you need to figure out the 15% rule. So you do 5,000 times your total limit of 15%. I'm sorry, 5,000 times 15%. So that equals 750. So let's do that again. It's 5,000. That's your total limit, right? And you're gonna times that by 15%. That equals $750. Circle that number. So now $750. That's where you need to have your balance at every month. Say like, okay, so I owe 5,000, but I need to get a 750. So what I do? So you just do 5,000 minus 750. So you need to pay back $4,250, $4,250. That's all you gotta do. But here's the catch: you gotta pay them on a due date. So let's say card number 1 due date is on the 1st. Let's say card number 2 due date is on the 2nd. Let's say card number 3 is on the 3rd. So you pay card number 1 on the 1st. Yeah. Wait 8 days to reuse it. So you count 2nd, 3rd, 4th, 5th. You count until the 8th day, usually the 9th day. You do that for all the cards. Your credit score going to jump up. It's going to jump up like 75 points, right? But now you like, somebody might say, well, what about the interest I got to pay? This is how the United States is. They have all this like a monopoly like this. They don't pay, they don't increase your credit score. So if you decide to just pay off the $5,000, you're going to get a small credit increase, probably like 10 points, maybe 5. But if you leave a little bit of interest, so that $750, you pay interest on that $750, they're going to reward you because the banks are like, hey, Marcus, let's take 2 people, Marcus and John. Marcus pays $750, pays the interest. The banks are like, hey, credit bureau, government, Marcus left some interest, left a balance, so we're going to charge some interest. We get to make money off that interest. So, hey, reward him with a high credit score increase. For one, the banks is like, okay, they're gambling with your credit score. They're like, okay, we're going to bet that Marcus, we're going to raise his credit. He's going to apply for more credit cards. Then he's going to get in credit card debt. We're going to take it from him, and he's going to be in collections, owe us more money. John, on the other hand, John decides to pay all the $5,000 off. So now the banks are like, hey, John paid off his $5,000. We're not making no money off John, but we got to give him some type of credit card increase. Give John 3 points. You're paying for your credit score. The banks don't have no money at all. They broke.
Right.
They really broke. They make money off of our money, interest. They charge us interest. But play the game, but play it to win. So you just got a 75-point increase. So now you go from a 620 to whatever that equals out to, let's say 700. Ding, 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 ding. Now, guess what happens? You can qualify for business credit now. What? How? You got a 700. Now, before we get you into business credit, Marcus, we got to get you some more credit cards. Because business credit, it mirrors your personal credit. So business credit, we want to see, they say minimum $5,000 for personal credit limits, but you want to run your personal credit limits up. So you want to ask for credit line increases every 3 months to 6 months. Get those credit line increases going. Because, for example, I just had a client, he had $30,000 in personal credit total limits. The young man got $35,000 back in business credit. So now, let's say Marcus decides to, apply for more credit cards, gets credit line increases on higher cards. Now Marcus applies for business credit. He has a 700. Now we look at his personal. We mirror it. So now Marcus gets business credit. And a lot of people talk about business credit. Oh, you got to go to Staples, get Quell, Q-Line. That's not business. That's business credit, but that's like the old school way. Like my business credit, I deal with and I give to my client tier 5 business credit. You can actually go and pull cash off these business credit cards and go buy a house. And I do it all the time. All the time. My attorney's like, how you wiring the money? I was like, I'm just going to bring a check, but I'm going to be using my credit card. Attorney's like, oh, okay, cool. They don't be caring. They don't be caring. As long as you got the money. They don't care how you get it. So the way business credit works, it mirrors your personal. So a lot of people are, oh yeah, I don't want a personal guarantee. You're going to have to. Unless your name Jeff Bezos or the Walmart family.
Right.
Or the Tesla guy, you good. But there's nothing wrong with personal guarantee because I guarantee you somebody has co-signed for one of their cousins to buy a car. That's how you're doing with your personal guarantee. You're co-signing for your business. And your business is technically you. Off the record, but on paper, it's 2 separate entities. So you're personal guaranteeing saying, hey, if my business fails, I'm still going to pick it up. And as a CEO of your business, you shouldn't even think like, oh, my business is going to fail, be scared. Personal guarantee. Now you have business credit. Business credit does not report to your personal. It's only 2 cards that report. Capital One Samuel L. Jackson commercials for business credit. Don't ever get that at all. And Discover. Those are the only two business credit cards that report to your personal. Everything else is free game. So now business credit doesn't report to your personal. So now, like, if you need to go get a car, a house, we're not asking about none of that business credit stuff unless you default and we see it. But don't default. With business credit, they don't care about utilization. They do and they don't, but it's not like personal where if your utilization is high, your credit score go down. It doesn't work like that in business credit. Business credit, everybody should be aiming to get 700 to get business credit, especially those people that have a lot of credit cards and just like to buy stuff. Just start using that. Like you could just transfer your whole credit profile to business credit and use that and leverage it. Because a lot of people don't understand. They're like, well, I got to pay it back. It's the bank's money. It's other people's money. That's all business credit is. It's someone else's. It might, like right now, I'm using somebody that's watching this live. I'm using your money to buy. and the reason why, when we deposit money to the banks, they take that money and charge me interest. So a lot of people, like when it comes to real estate investing, a lot of people, like I raise money with real estate. I got a method of how I raise money. And I tell all my funding partners, like, hey, I can easily go to any bank because I'm super bankable. I can go to any bank and they can give me this money. But I say, hey, I want you to make the money off the interest, not the Wells Fargo family, because they don't care about me. They don't care about you. I care about your family. So lend me some money, charge me an interest rate so I can get this deal done. And they're like, okay, Michael, what do I sign? Where do I sign at?
Okay, Mike, hold that before you go deep into that. So we have guests, the Galaxy Tab A and then the Galaxy S10. If either individuals have a question or a comment, because they've been on and they've been so patient, and I want to make sure we don't miss anything that they may want to say or want to ask you. You're welcome to unmute your line.
We're listening right now, but I have a few questions written down. I'll wait till he gets finished.
Okay. And your name?
I'm Tasha.
Okay, Tasha, thank you so much for being on. I really appreciate it. We both really appreciate it. Okay, so Mike. So Derek Grace. Derek, he owns his own bank. He's African American. And the one thing that Derek talks about is peer-to-peer funding, because when we go to the bank, they're only giving us 1%. So this is where I'm going with this. Oftentimes, because you and I have talked about this a lot, when you've presented a way for everyone can leverage everybody's money, I put my little bit in, the next person put in, Tasha put hers in, and then you are able to go, you have the properties, and we're all going to make money off of that. But a lot of times we're so we have skepticism. We're like, I don't know. But you go to the bank every single day and make a deposit, and the return on your deposit is so little, 1%. So he talks a lot about peer-to-peer funding, where we keep the money within ourselves and we become our own lenders, and we leverage, you may have a project that you're working on, but I'm cash heavy. I'm sitting on 15, 20,000. I got another friend sitting on 10, 15,000. But they may not really have something that they want to put it in, but you can convert that so the money just keeps reciprocal. Can you talk about that? Because a lot of times we are afraid as a people to put a little bit of money in to get a return and grow on that.
Yes. So I don't know if people have been watching what's going on with the stock market right now with GameStop and AMC, but it's really like middle class people versus the rich people right now. And I'm part of these. I'm not part of it, but like I'm in the thread on Reddit. I got invited in it, but pretty much like middle class people came together and said, you know what? We're gonna work together and do what these Wall Street hedge funds people do. We're gonna make money. And that's what they did. You come together as a group, you could crush it. But going back to your question, don't be scared to work together. And a lot of times, like with real estate, that's what I know. So I'm gonna say real estate, giving a real estate example. If you have somebody with money, somebody that is got decent credit, and then somebody that don't got no job, but they can go on YouTube University and learn. Y'all bad. Y'all like the Three Stooges.
You're right.
Y'all bad. And y'all could just leverage it like that. The person with the money puts you know, y'all create one LLC together. Person with the money funds the money, they get their percentage. The person with the credit fronts their credit score, they get a percentage. The person with the knowledge that has the time to do the task, they're working. So it's a job for them, but hey, they get the money. Now everybody's working. A lot of people are scared to lend their money. Like you lend your money, you have a 401k. A lot of people have 401ks. Did you know that on a 401k, and I'm not a financial advisor at all, I'm just somebody that understands the game and sees what they're doing. It's three people that get paid before you get paid on your 401k. It's the company that holds it, the broker that manages it, and Uncle Sam. You should
That's
you should get paid first. So now I want people to think like, hey, okay, me and my friends, we all have good jobs. All right, let's go invest in real estate. Don't go in it blindly because a lot of people are like, well, where do I invest? Like, for example, I know the guy, it's a lot of scams out there. So you got to do your due diligence on people that you invest with. Like, for example, with the Tulsa Real Estate Fund, that was just a terrible thing. Jay Morrison, if you invested in it, sorry that had to happen to you. But do your due diligence. But you all can come together as a whole and start building wealth for you and your team. Um, just don't be scared. Get that negative mindset out. And everybody wants to be the man or the woman of the show. It can't. It's not going. It can't work like that. They
right.
all got to work together. Someone has to be an expert in whatever they're going to be the expert in. Be the boss of that. Um, if someone's gonna be the leverage to good credit, hey, be the boss of making sure your credit is good so y'all can continue to get funded. Because banks, they want to lend money. That's how they make money. And a lot of people that I talk to, when I say, hey, like, just lend me the money, I go get the deal done. Some of them be scared. They be like, oh my God.
Because they don't trust.
Yeah,
People
they don't
don't
trust.
trust.
Yeah, they don't trust or they just don't understand. But after I like to break it down. But it doesn't have to be me. It can be anybody. But don't be scared to lend your money, especially if someone who's an expert in that field
Right.
wants to help you make money. Because a lot of people say they want to make money, but when the time comes, all right, you want to make money, let's go.
Let's go.
Because money is really just a tool. It's soldiers. And for all my veterans out there, this is a concept I use with my money. My money, they're soldiers, and I send my money out there to bring me more soldiers. The more soldiers I have, man, I can beat North Korea.
That's true. That's true. And you're doing it every day. You're doing it every day. It's like gradual steps. But I remember the beginning of your journey and where you are today. It's like it's consistency. It's taking time to learn. You eat, sleep what you do. You're very passionate about what you do, and you got yourself into it. And you keep making reference to this because I want to point this out. So often people put like when people pay into credit restoration, like you said, I don't want you to keep coming back. You need to learn the game. If somebody gives you a resource, don't just listen and say you sitting there shaking your head, nodding. Become the student of the information that you're receiving, because people will sell you a bag of rocks, and you keep coming back paying for the bag of rocks. So knowledge is key, but applied knowledge is something totally different, because now you can go and educate another person on the information that you received. So I thank you for saying that, Mike, about that. So Okay, compound your time and your money. Can you talk about that leveraging? And I know it's a little side note, but how you apply your time, your money to get a greater return, kind of how we say compound interest, but you know, because I know with your time is of the essence to you, but you're leveraging more of the knowledge that you have now. In the beginning, when you first got started, you had to put your time in, you had to learn, and you was a student. Now it's a little different. So how do you go about, because I know you have a lot going on. How do you manage all of that to have a win-win for yourself, for your business, also for your clients, also for the investors that you are connected to?
So, as an entrepreneur, it's about systems. I'm learning. I'm still learning systems, but 2020 last year, like I really learned like level down on my systems because a lot of people like, well, you're a mortgage lender, you flipping real estate, like you everywhere, and really, all I do is mortgage lending. Like that's all I do because I have a system. So for my real estate investing business, I have a team that pretty much my project manager, shout out to him, Dale, I'm the business. He manages the whole entire real estate investment portfolio when it comes to the rehabs of the house. So that frees me up because he's not working a 9 to 5. Like that's all he does. And he does that for his own stuff. So I have him just managing the whole process from A to Z, and I'm just managing the money that we receive, and that's easy. Like that's just taking, hey, lunch break, go to the bank, even times, work on it. But it's about a system and having people do delegate because a lot of people that run their business they want to do everything just to
Right.
save money. But I tried it with my mortgage business, and it doesn't work if you're trying to do everything. It's good to know certain things, but once you truly want to grow, you gotta have like a system and just delegate, even if you have to outsource do it because once you do it, now it's going to help you where you could do money making activities. And a lot of entrepreneurs like they're scared to delegate, scared to spend that money. Like everybody that's in my personal business spirit, they know I will delegate something quick, super quick. Like, oh, how much? Oh, I don't gotta do that. All right, here you go.
That's just,
Because it's all about is managing your time, and time is more valuable than money because you can't even get that back.
that's
Like
it.
you can't get that back. Like after the time, like you can't get that back. So when I talk with people, give them advice, like I like talking to me, and I have my goals. Like it's important to have goals too. Like I got this goal breakdown. Like every conversation I have is worth $1,000. Like every conversation is worth $1,000. Just because with my goal, how I break it down, but just manage your time. And I just let my businesses like work for me. Like right now, I remember when that post that I posted of that home that we rehab, that rental house. I went out of town. My project manager went out of town, but the guys were still working. We went out of town 2 weeks in a row. The guy's still working. They got paid. The business is just running on its own. It was a beautiful thing. And if you're gonna set your business up, even your life up, where like you want to spend time doing money making activities, like for that person that's watching this and their credit is not right, go on YouTube and just learn. For that person that has a terrible job and they just want to change, go on YouTube and just look up real estate investing. Like you can first start out as a wholesaler. That's what I got in it as a wholesaler. From wholesaler, I went from a flip, and from flipper, I went to being a private lender. Um, but like it's just taking your time and using it because we all have the same 24 hours. Instead of watching like the basketball game or, Love and Hip Hop or Lifetime, like you can go on YouTube and learn something and apply it. Like, I know one day I was just walking in the neighborhood and I gave a gem of, hey, right now you guys could be a notary. I gave everybody the
Hmm.
steps on my live what to do. And Brenda, I think it was Brenda Oakley, shout out to her, she applied it and did it. And I think Renee too, a lady named Renee. Like those two ladies applied what I said on my live for free. And they inbox was, hey, Michael, I got my notary license. I'm ready to go. And I was like, oh, like right now in America, there's no reason why a person should be struggling if if you're capable of getting to that bag.
That's
Because it's so many opportunities. Like you can do network marketing. Like it's a great organization I used to be a part of called Total Life Changes. You're a part of it. Phenomenal organization. It's so many ways how a person can you can tap into that. I know somebody might be like, well, it's oversaturated in Raleigh Durham. Well, guess what, boo boo? We got the internet.
right.
All you got to do is figure out what states, what small town TLC is not popping in, or that network marketing product not popping in. Set up shop, go and get busy. And you don't even got to get there. You don't even have to go there. All you got to do, hey, I'm looking for an assistant to do this. It only takes one person to start talking about their product. Now everybody has it. So YouTube University, I challenge everybody for a week. Whatever your dream job is, your goal for 2021, instead of watching the game, playing the game, just doing something that's not a money-making activity, take that time and learn. And inbox me, tell me how your life has changed within a month.
That you sound like ET. And he said he be waiting on people. He be waiting on people and they don't ever, because people don't make a decision to make a move. To what you said about the notary. Okay, so Mike, I signed up for the class, couldn't figure out why I couldn't get into class. They said, honey, it's filled. I kept saying, I'm trying to pay. They said, did you see it's filled? So I'm waiting to finish the other piece of my real estate exam, my state, because I passed. I've been saving that for you. I'm done with my nationals, but I missed my state by 5. So I said, okay, do not sign up for the notary loan, because I want to do the loan piece, link up on that. But the classes have been filled because people are finding another way. Like it's another way. People sign documents all day long, you all. I had somebody reach out to me the other day and ask me, they said, Patricia, are you a notary? And I was like, man, I had to text back and say, no, because I didn't get into class because the classes have been on lock. There's so much, like Mike said, there's so many different things out here that we can do. So Mike, I'm skipping. Can you talk about, I love that post that you did the other day and you were talking about, we settle. We don't buy our dream home. Nobody ever tells you about, go buy an investment property, a rental property. That property that you showed the 850 in and what your monthly expenses was, can you break that down so people can understand, how you can create a stream of income versus going into just buying a house just to say I have a house?
Yes. So, yes, I can. So when it comes to that, I tell all my first-time home buyers, think like an investor. Don't fall in love with the house. Think like an investor. Because a house is not an asset. The house that you live in, like the house that I live in, it do not make me no money at all. It takes money out every month. Yes, it's comfortable, but think like an investor. When you out here, especially Raleigh Durham, I know it's crazy out here. It's crazy in the whole North Carolina, but if the market's on fire, you and your family really think about a plan. The average first-time home buyer only stays in their home that first time 5 to 7 years. Before you, or after you talk to me and get pre-approved, or even before, think about your plan. Write down your 3-year, 5-year, 7-year plan with this house. Because home values are going up. It's not going to be another '08 crisis. '08 crisis is what we're seeing today in the stock market. Manipulation by the big hedge fund people, the big banks. But if you think like an investor, have a 3, 5, 7-year plan, you can go in and say, okay, I know Michael said we can qualify for 275. Don't go for that 275. Don't come back with me and say, I need 276 and I qualify you with 275. It happens all the time. But truly think about, okay, how could we leverage this house? Because, for example, I had a buyer that brought in 2016 her house. She's about to put her house on the market. This lady's gonna make, when it's all said and done, after she pays the real estate agent fees, closing cost fees, she's gonna walk away with $85,000. That's a 4-year time period. People, you don't gotta try to shoot for that dream house. Shoot for that house where hey, the values are going up. Look at Zillow, ask your real estate agent, hey, what's the appreciation on these houses? Well, they should know that. Hey, what's the values every year that appreciates in this neighborhood, on this zip code? You want to know that type of stuff. If it's 8%, hey, times that by every year. Then also look at, okay, my job situation might change. You might get a bonus, you might get a raise. Okay, you might be in a situation where you can rent that property out instead of selling it. So now you got to look at, okay, let me look at my debt to income ratio. Excuse me. You can say, Michael, tell me more about my DTI. And then you can, ask, hey, Michael, in 3 years, 5 years, do you think I can buy another house and leverage, let this first house feed my family? Because a lot of people, when they think real estate investing, being a landlord, they think, oh, I got to be a landlord. I got to, have people come on phone. Nope. They got property management people out here that love doing it. I personally hire property management because I don't have the time to be a landlord. But I can pay somebody 8% to do it for me. Right? And then a lot of people think about, oh, I'm going to make the most money as an investor if I rent this house out. An extra $200 is better than zero every time. Mm-hmm. And that's a month. An extra $200, that's a light bill, that's a phone bill, that's groceries for the month. So to all my first-time homebuyers out there, I really want y'all to think like investors when you're looking in the market. Yes, I know these homes are beautiful, but I'm gonna just put it out there. They're making these homes cheap out here. These like them old school homes is the real good homes. Like these new homes, they cheap.
You all hear that?
Yeah, they cheap. Like they overpricing them. Like, and right now, homes are going to be overpriced because the material is priced with COVID. But again, if you don't gotta max out your DTI to buy that dream house, don't because you could leverage a cheaper house in a decent neighborhood. Because a lot of people, especially our people, they kind of be scared of it's too many black people over here. I'm gonna move over here. Get the house. Get the house. Don't be scared. Get the house. Because here's the thing, you can actually rent. You can actually rent out a house. You can stay in the house for 1 year. You can get in the baddest neighborhood. You just got to stay there for 1 year. That's what the guideline says. And you can rent that bad boy out the next year. And now, so, you in the game.
I've seen plenty of houses that you flip, done all of that. Can you give a scenario? You don't have to say where. Can you give a scenario of that it was looking like truly a hole in the wall, but you got a great return? I'm just putting it out there. It looked horrific because this is what I know when I used to sell in Ohio, when I was a realtor there. And some people do not know how to see outside the box. We say curb appeal is huge, but a lot of times you have to see beyond what you see. You have to be able to really not think of it, especially from an investment standpoint. And some people be like, no, I don't even want to work, but it's so much potential value there. So can you give a scenario of a property that it was just really, it looked horrible, but you got a great return off of that property?
I say the property that I just did, even though I haven't made no money, like I pretty much got the financing situated, know my numbers. That property was ugly. It had a huge, like the roof, like had a hole in it. Like it was
Gosh.
a hole in the roof. Like, like I showed it to one of my investors. I was like, yeah, this is what I'm about to buy. And they was like, what?
They said you crazy.
Yeah, they was like, you crazy. I was like, nah, like I love them ugly houses. Because the thing is, like, the uglier the house when it comes to real estate investing, the more money you're gonna make. Because now two things are gonna happen. And I said another ugly house when we did a flip last year. The house was ugly, toe up from the floor up, ugly. Like my partner showed me the house, I was like, oh Jesus, good luck. Like, okay. Um, you just gotta have that vision and just really know, like, you got to work with a good real estate agent that understands their comp, because a lot of first time home buyers, they're like, oh yeah, I'm gonna get into investing, and they're like, I need an agent. Don't go with the first agent you talk to. Go with an agent that is an investor themselves and understands what you're trying to do. Because there's a lot of agents out here. I'm not trying to diss nobody now, but there's a lot of agents out here. They don't own rental properties. They never flipped their house. So what you're trying to do, they not understanding it. They just looking at you as a dollar sign. So it's good to find an agent that understands, okay, how to work with a flipper. Because, and this is huge, like I'm dealing with a situation now in a deal that I have. The agent let my FHA borrower, the seller's agent let my FHA borrower get under contract. FHA says 91 days. It's a flip rule. If that agent knew what they was doing with that particular flipper, that investor that was flipping that house, they would have told that investor, we can accept this offer, but we got to wait until the 91st day to accept the offer.
Okay.
Because the FHA flip rule. Agent did. So it's good to know have an agent on your team that understands what you're trying to do. And every agent is different. Some agents might understand just house flipping. Some agents might just understanding buying a house and renting it out. So interview your agents. The same with lenders. It's a lot of lenders that don't own real estate. It's a lot. And to talk to a lender and say, oh yeah, I'm trying to, do this investment property. And I see it all the time. People like, yeah, the last lender said I couldn't do it. They denied me. And I'm like, wow, like I know what you're trying to do. You're trying to do this, that. Okay, you can do that. Come back to me when you finish, we refinance it. Give them the steps. So you want to talk to someone that's already doing what you want to do as an investor. But yeah, you definitely got to have that vision. Don't be scared, because those ugly houses make money. They make money. And if you can go into small town USA,
Right.
them small towns, I love them. Small town USA, you can go into pick a neighborhood, pick the ugliest house, fix it up. Now you're going to get the people talking. Because the small towns, they need love too. A lot of people just think, oh, Raleigh, Durham, they don't think like you could do real estate in different markets. Like Ohio, I'm looking into Cleveland, Ohio now, because it's a lot going on out there.
That's home. I
Yeah,
got you.
like
Name some
yeah, like
streets. I'll tell you.
yeah, it's a lot going on. It's a lot of opportunity out there.
Yeah, it
A
is.
lot of people sleeping on. And again, I've never been to Cleveland. Don't want to live up there, but I'm gonna take a flight to go handle my business and see what I'm working with. Hire the right people, interview the right people, have a real estate agent that knows some people, knows the right people that can manage, what you want to do. And now you in the game.
Exactly.
And yeah, and the ugly houses, they make money. They
Say
make
don't.
money. Don't be scared of the ugly house. Even as a first time home buyer, I'm not saying go buy that house with the hole in the wall. Please don't do that. Don't do that. Don't do that.
Not the holy water.
Yeah, somebody be like, hey, I got this house. I'm like, nothing don't work. I can't do this loan for you. So as a first-time home buyer, I say, go for the basic looking house. Even when you go out to new constructions, those builders, they're gonna try to upsell you.
Mm-hmm.
They're gonna be like, oh yeah, go with this, go with the granite, go with the Spanish sheet of wood. tell them and look them in their eye and be like, Michael said, I need to get the basic house.
Right. They gonna back off real quick.
Yeah, they're gonna be like, what?
Right.
Get the basic house. It's gonna be a lot cheaper, and it's a group on Facebook. If you're in the Raleigh-Durham area, it's called Wake County Home Improvements.
Let me put it in the group for everybody.
Yeah, Wake County Home Improvements. It's the best group. It's so many people in this group. It's like contractors, like legit people in the Raleigh-Durham area that can do certain things. Like, if you want to put a fence up, you can hire somebody to put a fence up. You want someone to paint your house, you can hire somebody to do that. Put up your TVs when you move to mount them. I got somebody for that, but you can find somebody in that group. But that's where it starts, because a lot of the first-time home buyers, they get caught up, oh, this house is beautiful. Remember, you got to remember that payment, because these builders, they're upcharging on everything. I remember when I purchased my house last year, January, my builder, I'm not going to say their name, but they try to charge me like an extra $2,000 for some blinds.
Wow.
I was like, nah, I'm good. I can put on my own blinds.
Right.
What I end up doing, I hired somebody from the group to do my blinds and paint. Like, this dude did everything for me. And my blinds came out to be like $500. I paid him another $300 for like just to hang up the blinds, because since he did everything else, I'm $800.
Right.
Somebody be like, man, you could have put up your own blinds. Y'all gotta look at like the blinds. They ain't the easiest thing to put up.
Right. Oh wow. Okay, so Mike, thank you for sharing all of that information.
Yeah.
So for the person who's the new home buyer, and people get excited, as we're going to talk about, people about to get some tax money and stimulus on the loan a little further down. But why is it so important once you ask? Well, first, explain the difference between a mortgage broker and a loan officer, like if you go into your traditional bank versus a mortgage broker.
Can I ask him a question before he gets into that?
Yeah, is this Tasha?
I did a little hand raise at the bottom.
Oh, yeah, she do got her hand. We just going, go ahead, Tasha.
However, how do you feel about the tax auction? Because one of my issues is, as you spoke, my credit score isn't quite as low as you spoke of, but it was on the rise, and some things happened when I stopped working or whatever. However, I have gotten my EIN and my LLC. I've gotten all of that in place. I am working on moving some things, with my credit, but in the process, we had, I'm sure all counties do, but the tax loan the tax auction where they buy, where you can buy houses for the taxes that they didn't pay. And that's really big in my area. We're small, but it's really big. And I was looking or thinking about that to do as properties to rent, but I know that there's a waiting period. So do you have any insight on that?
Yes. You don't have to wait for the county to put those houses into foreclosure. You can actually go to the courthouse. It's like the court of clerks, and you can ask them like, hey, can I see all the tax delinquent files? It's gonna have the address up there, and stuff like that. And then, all you gotta do is either you can go directly to the person's house, knock on the door, tell them what you're trying to do, or you can write a letter first, send out a letter, and let that person respond back to you. Because once like the clerks put it up for auction, it's a whole bunch of investors bidding on that same house. So I wouldn't even wait for them. Just, go to the clerk of courts, get the information, try to find their phone numbers. If you go on YouTube and look up how to find vacant owners, phone numbers, you can find like a wealth of information. It's a system that we use, but I can't really tell y'all what system I use. You don't have to pay for that knowledge. But you can get it done though. You can get it done. Like I know, for example.
Well, I know how to go on. It's an online where you can find the owner of any house in town by the address.
Yeah. Or just knock on the door. Like I did that last month
But
and
if
I got
it's
a deal.
vacant, how you gonna knock on the door?
Well, you don't know if it's vacant because you can have people like right now. What's going on, especially with COVID? A lot of people are kind of in the pre-foreclosure stage, but they can't really technically go into foreclosure. So you can still knock on a door, or like with some of these sites, if you find the right site, it will give you, and sometimes even in the clerk's office, it give you the property address, and then it gives you the owner what their address is, where you can send mail to. And if you get the owner's physical address, oh, you golden. Go knock on the door. Because that's what I did. I knocked on this man's door. His wife picked up the door and I was like, hey, is Earl there? She was like, who are you? I was like, oh, I'm a friend. I'm trying to buy his house. She was like, yeah, Earl, man, I'm talking. I'm like, hey, Earl, let's go to Bojangles. This man about to sell me his house.
That's crazy.
So you can do it. Don't wait on nobody. Just do it.
All right, thank you, sir.
Tasha, did you have another question?
Not right now, but I'm sure I'll come up with another one before it's over.
Okay, awesome. Well, we appreciate you being here. Thank you. Okay, so Mike, can you explain the difference between the banker, loan officer at the bank, and a mortgage broker?
Yes. So I'm not a mortgage broker at all. A mortgage broker, they pretty much shop your loan to different banks. Um, that's pretty much it. They just broker, but they don't have no control. So whenever that broker closes your loan, they get paid. The bank, whoever they shop it to, they take control of the mortgage. All the terms and stuff be the same. A mortgage banker, I'm a mortgage banker, but you have two different type of mortgage bankers. You have a mortgage banker that works for a bank, like a Wells Fargo state employees. They are pretty much just working for that one bank, so they only have that one product. And then they might have overlays on top of the guideline. So, for example, I know with COVID, some banks are saying, hey, for FHA, you got to have minimum 660. So for a mortgage bank that I work for, all we do is service mortgage loans. We don't do deposits like the banks and car loans. We just do mortgages. And we just follow the guideline. We don't got no overlays. That's the type of person you want to talk to. You want to talk to a mortgage banker because with their one bank, you can have some advantages with just going with that one bank, because their products will be easier. You're not getting thrown through the loop and stuff like that. But it's nothing wrong with talking with a broker. I used to be a correspondent broker, and it was a learning experience, but never again. Like because dealing like correspondents, they still gotta follow a bank's guideline. Like they don't have no rules. Like they don't have their own rules. They gotta listen to a bank. But being a direct lender, like I work with New American Funding, we have our own rules. So this bank might say, oh, like for example, I had a bank that said they're going to do a USDA loan with a 640 or under. Well, my bank, we're still doing USDA loans at 630.
So what would be for individuals that are not here in North Carolina, people here, they can reach out to you. But if they're in a different state, like I have a couple relatives that are in Ohio that I know, Cleveland, matter of fact, one person, she invests there. And what would be the right questions to ask to make sure they get a banker that doesn't do the overlays like yourself?
So my company, I can introduce them to somebody in my company. We do all states but New York and Hawaii. But yeah, I can make that connection. Or if they do meet with a banker, just ask them like how knowledgeable they are. Are they a broker? Are they a mortgage banker? I tell people all the time, try to stay away from big banks when you're doing your mortgages because for one, they're slow and they really not gonna give you like the best service that you're gonna get because they're pretty much just they got a whole bunch of leads and they don't work how we work. Like they get paid a straight salary and a small commission. Brokers and direct mortgage bankers like myself, we get paid a commission. So we work, like I had a client close her loan in 11 days. I remember 2 nights in a row, I'm staying up with her at 10 o'clock because she was a teacher and that's what time she was available. So your big banks, they're like, oh, that's not my work hours. Call me
Gotcha.
9 to 5, maybe 6. Um, so you want to work with someone that's very flexible, that can text you back, that can answer. My clients know, like I usually answer, like if I'm by my phone. I try to cut it off at like 8:30. But if I'm by my phone, they text me something. Hey, yeah, yay or nay, yeah, I respond back. This is something quick to answer. But just ask them like, what programs do you have? Do you have any overlays? Ask them, do they sell their mortgage? Ask the loan
I was
officer.
going to ask you that. Be, Thank you for bringing that up. That was going to be my next question because most people don't understand before the ink dries, their loan is already sold with big
Yeah.
banks. They've already sold. Can you talk about that? Because that could be very shocking. The person's like, well, my mortgage was what with BOA or Wells Fargo, and then they get it from a whole different that they didn't already sold it.
Yeah, it's nothing wrong with it, but it can get confusing. Like for one of my properties, I had my mortgage sold, and the bank that got it at that time, I could not make my payments online. Like I had to call in or mail it, and like it was just like, come on, like I got to call, be on hold, like put a debit card. It was just a mess. So selling mortgages, nothing wrong with it. Thank God that the mortgage company I work for, New American Funding, we service all of our loans. So we never sell none of our mortgages. We have a service department that holds the loan, which is great. We only sell like our down payment assistant loans and our jumbo loans, of course, but regular mortgages, nah. Um, there's nothing wrong with that, but hey, if you can go with a lender where you can, build that rapport with that loan officer, stay with him or her. And I tell a lot of clients, when you interview a loan officer, ask them like, hey, are you gonna follow up with me if the market, changes? If rates go down, rates go up. Like I do check-ins with all my past clients, just giving them updates on the market, educate them, ask your mortgage lender, like, how could you help me build wealth? Because I tell all my clients, like, hey, I want to help you build wealth. Like, you got this one house. We need to think about the next house, especially my clients with good credit. I give them like a plan just to think about, like, hey, you can become a real estate investor. And this is all we have to do.
And I'm
Yeah.
sure a lot of them have not even thought about that. Many people are just going into it looking to do one purchase. They're actually thinking like, man, I didn't even know I didn't even see myself as an investor.
Yeah.
So that, I want to let everybody know that just shows just how dedicated Mike is to what he does, is that he's seeing the bigger picture for that person's situation and building their portfolio. Because as African Americans, a lot of times we kind of go at things, we're years late, days late, and we always find out afterwards. And so he's putting them in a position where they know up front what their options are before the ink even dries. So Mike, thank you for sharing that.
Yeah.
You're welcome. Okay, so a lot of times people get approved for loans. And once they get approved, then they go out and then they go and buy something. They go and open up another charge card, or because they are excited. And they're like, oh, I got this house. What else can I get? But they don't understand that they're still going through the process. They haven't closed, and now that's affecting their debt to income ratio. Can you talk about why because I've had situations when I had my license where a person then went out and bought appliances ahead of time, and it's like, hold up, and it shows up because you all pull another credit report. I think in most cases, can you talk about that and why, if he says do not go out and buy anything, he means do not go out and buy anything?
Yeah. So I tell all my clients, like, hey, if you go buy something, I'm just going to deny your loan.
Wow. That's
Yeah, because it's like, hey, like my team, they work very hard. And for you to be selfish during the process, when we tell you up front, even when you sign your loan estimate, it tells you like, hey, It's like a rule. It's like, hey, don't buy nothing. If you do that, that's being selfish and that's not thinking. Like, just, I know you're excited about buying a house, but please don't buy no car, no appliances. Be broke until you close.
Right.
Be broke. Um, and then after you close, your loan gets funded, then you can, do that stuff that you want to do. But definitely don't buy anything. I know people like, well, I'm just gonna go to the furniture store and look. I tell them that's fine, but that salesman is gonna tempt you. I need you to have the discipline and say, we just looking. And I ain't gonna lie, when I bought my house in January of last year, I was the same. I was looking at appliances, going here and there, but I was like, hey, like I'm not gonna buy anything. I'm just looking. Just talking to the salesman to build a rapport. Because if you build a rapport and say, hey, I'm closing on this day, and you can ask them to hold a certain product for you. You can say, hey, if I come back, can I get a discount? You can work it like that to your advantage, but don't, let them pull your credit, none of that stuff. Just be very disciplined. Got to be. Because if you're not, I'm going to be like, hey, we got to deny your loan.
Wow. So before we move forward, thank you, because you were getting ready you talked about um the denial piece of it. But so let's just say if somebody spent $3,000 during this before they got funded, how much does that amount? Because that doesn't seem like a lot. How much does that throw their debt to income ratio off based off of the numbers you all have just ran for that person?
It depends on how much that monthly payment is.
Okay.
Like, I have had a person buy a car before closing, and they didn't tell me. Like, they got in a car accident. And when I tell you, like, we got it done, but it was just like he was like, yeah, man, like, I thought I'd be good. And I was like, man, I would have paid for your Uber for 2 weeks.
Wow.
Like, you got to be in communication with your loan officer, because whatever that new monthly payment is that you got spending 3,000, it can mess up your DTI, especially if your debt to income is tight. One little $100 monthly payment can shoot it up and change everything. So definitely be smart about it. Like, communicate with your loan officer. I know a lot of people, they talk more so with their real estate agents, which is great. But when it comes to your financing, talk to your mortgage loan officer. The same energy you give to your real estate agent, give to the person that's lending the money. Like, get that same energy. Like, call them, be excited, be like, hey, this is what I'm thinking about doing. Like, the clients that do that with me, really all my clients, they do that with me, because I set the expectation up front. But like, the way they do is love, and it's like, okay, I tell my clients, you got a friend, and when you're doing business with a bank or trying to figure out who's going to be a loan officer, make sure that person at least is going to be your friend. Like, make sure the energy is there. Like, okay, I can call John anytime. John gonna pick up. Let me run this by John real fast. Because now John is like, okay, I got your back. Don't do that right now. Just wait until closing to do it. Mm-hmm. And sometimes, like, with my older customers, they might be like, I really like it. I'll be like, hey, Miss Jane, give me the phone number to the furniture place. I'm going to call the guy myself. Introduce myself, tell them to hold the furniture. And they hold the furniture for Miss Jane.
Well, you know what, Mike? I think a lot of times people get nervous about their talking about their finances. They excited about the house, the look of the house, and all that. But when you get to talking about, social security number, and they know their bank situation and their credit, people are kind of on reserve. So I think the relationship for you all is harder to obtain versus the agent relationship.
Yeah, it's you are exactly right. And people, like, change your mindset about that, though. I want everybody to really start thinking about their finances. Like, hey, you speaking to the money man. I tell all my clients, like, you don't got nothing to worry about. You speaking to the man with the money, the bank. Like, be excited. Don't be nervous. And I tell people don't be nervous, but every time my lender pulls my credit, I'll be nervous. I'm like, is it bad? Is it good? What I do now?
Wow.
But like, just have fun with it. Don't be scared to talk to your lender and doing business with your lender. And I tell a lot of people, like, hey, if I can't get you approved today, it's never a denial. It's always a game plan if we can't get you approved. Like that. And just think about that. Like, Belinda says, oh, we can't help you and deny you. Call me. I'm gonna give you a game plan. Because you need a game plan. Because you can buy a house. It's just everybody has to have a blueprint. You get that blueprint, you rocking and rolling. And that's what people just need. Like, a lot of people, when they talk to these like big banks, a lot of big bank lenders, they don't understand credit at all. They understand how to say yay or nay to a file or structure a loan, but they don't understand credit and how to tell a person, hey, if you do this and do that, you're going to get in the house. And some of them say, that's not my job. We're not in the business for credit repair as lenders because I don't do credit repair anymore. But I'll give you a free game plan. And for those borrowers, don't depend on the lender to follow up with you, especially if you have bad credit every day or every month.
Right.
The ball is in your court because here's the thing with all mortgage lenders and real estate agents. We want to help you, but you got to put in the effort to help yourself because we are in the business to make money. And if I got good credit Sam and bad credit Ebony, I'm going to make sure good credit Sam is good. Ebony, you cool, but if you ain't following up with me, like you should be telling me updates so I can put in my notes, that's cool. We can't chase you. Because Sammy, he needs my attention. He's ready. You're not ready right now. If I focus my energy on you, Ebony, I can't feed my family. I can't help Sam get his dream house.
That's good, Mike. I like that. So you all really catch that because a lot of times, when things don't happen for us a certain way, it's due to the fact that we haven't been disciplined enough, committed enough to, like Mike said, having a game plan for ourselves. And people can't help you if you're not willing to help yourself. If he's giving you a game plan, do this, this, and this, and your credit isn't quite where it needs to be, and by him having a credit restoration business previously, he's telling you what you need to do. He's the underwriter. He's the person that's going to be looking at the numbers. You got to go do that. And then that would give the person the energy or the aptitude to say, you know what, let me reach back out to Patricia, or let me be available when Patricia comes because she did X, Y, and Z. We have to help ourselves first. Mike, thank you for sharing that. I don't think the ladies have any questions. I'm checking to make sure they don't have their hand raised. What can you go over some of the programs that are out there that people may not even know about?
Yes. So you have FHA. You just have to put 3.5% down. That's a government loan. You have VA. That's for veterans only, 0% down. You have USDA. That's another government program. You have to move into a rural area, and that's 0% down, but your debt to income ratio cannot exceed 41% on the back end. That's a great program. Got to move to a rural county. Then you have conventional loans, conventional Fannie and Freddie. They're phenomenal loans as well. And then you have down payment assistance. I know everybody and their mama love down payment assistance. They be like, yo, our relatives out get down payment. That's the worst program you can get. I'm gonna be honest. A lot of people ain't gonna sell it to you like that, but down payment assistance, hear me out, is the worst loan a person can get. And I'm saying it as a loan officer. And a lot of people that want down payment assistance, sometimes be people that got the money. Down payment assistance loans, the interest rate is always higher, and it's not grant money. It's not free money. That's money you gotta pay back. And so for a program in North Carolina, it's like an NC housing program. It's a great program. I have done the loan for some people. They give you $8,000 towards your down payment. That's like the main one everyone wants to go after. Well, with this program, that $8,000 is forgivable. It becomes forgivable in year 11. So for example, I know people like, I'm not going to refinance. My people that brought, when I got into the business, when interest rates were 4.75 and 5%, that got those down payment assistance loans. They called me in 2020 saying, hey, Michael, rates are 2.5 on a refinance. Okay, great, let's do it. Well, when I told them about the program initially, hey, like we do this program and you to call me for a refinance within a year or 2 years, or before 11 years, we got to pay back this 8,000 no matter what.
Wow.
And they're like, okay, that's cool. I'm not going to refinance. You sure? Like rates might go down. No, rates going to, okay. So now we're refinancing them. When I do the refinance, the way I structure the loan, we got to pay back the 8,000. Got to pay back the first mortgage. So now I'm like, hey, you got closing costs you got to pay. What? Closing costs? Yeah, you got to pay closing costs. They're like, well, I got down payment assistance. Yeah, but you got to pay that loan back. They in the business to make money. That loan becomes forgivable on year 11. And then by year 15, like it falls off. The average home buyer doesn't stay in that first home for 15 years. So these down payment assistance programs are very, very misleading. And a lot of people want that free money, but don't understand that all money ain't good money. I'd rather for a person to pull from your 401k, and you can do this with the CARES Act. If you have a 401k, pull from your 401k, telling me the hardship loan, you buying a house, they're going to say, hey, give us a sales contract. Now, you have the money for your down payment plus closing costs if needed. And then let's say 2 years comes, you want to refinance, do a cash out refinance, but at no charge to you. Because usually with cash out refinances, to get a no cost cash out refinance, the lender just going to roll the closing costs into the loan amount. So pretty much bump the loan amount up higher, but you don't come out of pocket. It's a win-win for everybody. So now you're in a situation where you can do that. Or let's say you decide to sell the house, and I had a young lady that this happened to. She did down payment assistance. It was way before like the 11-year mark. It was like, I think she stayed in the house for like 6 years. Well, when she was selling her house, she was banking on, okay, I'm gonna make X amount. Well, what I told her was, oh, you gotta pay this $8,000 back. She was mad because now that kind of defeated the purpose of her selling. She ended up having to bring extra money because she was depending on the sale of her house.
Wow.
For what she wanted to do with down payment. So she had to find extra money because the 8,000 was eating up her profits. Wow. So first time home buyers, move up buyers, be smart. If you truly need down payment assistance, take it. But just know like, okay, you got to pay that money back. There is a program out there that I'm partnered with where they do a grant. It's a match program that match with your closing costs. But if you have the money, bring your own money to the closing table. Closing costs can be worked out from your mortgage lender, the seller, and your real estate agent. A lot of people, and I know agents will be like, no, we not. But here's the thing. The agents make money off the sale. Mm-hmm. And I know some rock star agents that I deal with. All the agents on my team, they do this. Especially if the numbers is tight and our buyer doesn't have no money. I have seen my agents give a portion of their commissions to help with closing costs, which is great. Like all my agents on my team, they do that. They solid. They don't do it all the time because they don't need it. But in a situation where I'm maxed out of how much money I can give, the seller's not going to give no money. Hey, the agent just steps in and helps out. That's the type of person you want to find to work with. But closing costs could definitely be worked on. When it comes to the like new construction, a lot of people love going new construction. And they say, hey, the builder said I go over there, man, they're gonna give me $5,000. Let me tell you about the builder lender. He don't care about you. He care about his pockets. You're just a number. And that's facts. A few of my mortgage buddies have left builders because it's like a sweatshop over there. It's just clients. They just, hey, next client, get them approved. They're not going to call you when rates go down or rates go up. They're not going to call you. They're not going to educate you. So a lot of people look at, okay, my My builder say he can give me 5. Talk to your mortgage lender, see if they can at least match it or be close there. But just don't think about, hey, I'm gonna go to builder lender, because it's all about that relationship with your lender, your banker. Your banker can help you at the end of the day. Your banker and your real estate agent can truly help you. So when it comes to these programs, listen to your lender. When you talk to your lender, just don't get off the phone. Ask your lender as many questions about the programs. You can go on YouTube and look at the programs, but really just look up, you can contact me, call any other lender, just talk to your lender about the programs and let your lender structure the best program that fits you. And just because you say, like, your lender might say, for example, for a $200,000 home, if you put 3.5% down, the down payment is gonna be 7. Your closing costs might be another 4, so that's 8, 9, 10, 11. So let's just say like $12,000. That's how much you probably gonna need to have. But let's say you got 7. The lender, the real estate agent, the seller, we can figure out how to give you the extra, get you the extra money.
Gotcha. So thank you, Mike, for explaining that, because closing costs, you all, is, you have to come to the table with closing costs. Well, he covered down payment assistance. He explained all the different programs, but you're going to have some closing costs. And unless the seller is going to be generous enough to just gift you, you got to come up with this money. And I know in the past, I actually had given up commission a long time ago, and the seller's agent said, they're like, I'm not giving up anything, but in my heart, I'm like, I want this transaction to happen, and I want her to get her home. So it was worth me giving up some of my money so she can be able to get what she needed to do. So thank you for sharing about closing costs. Now, I want to ask you about predictions for 2021. One thing that I saw, and I want you to speak on this, it said that millennials is the fastest growing segment of home buyers. So I got to thinking about, typically most people think younger people just want to rent, but I know millennials now, most millennials move quicker nowadays than older people do. If something is booming and popping, a millennial is not afraid to say, tell me how you did that. Put me on, where older people sometimes overthink everything. So that's what it said. And this actually went back to 2018. It was like 36%, 36.5, 25 years old to 34 years old. And then it went up by another percent. What's your thoughts on that as far as millennials? What are your predictions as far as the housing market now in 2021?
Millennials are buying houses now. They have access to technology, so they're seeing the true cost of renting versus buying. Mm-hmm. So, millennials, we are smart, and we know that, okay, instead of me paying this guy's rent, I can just go buy me, a small little, house, townhome somewhere. Not the cutest little thing, but at least I could own it and get equity instead of paying someone else's mortgage. So millennials, they are definitely on the rise, because I notice a lot of the older folks, they are downsizing, selling their homes, going to rent. Because now older people are like, hey, I'm tired of dealing with this mortgage. Let me sell this house, cash out, just pay my rent. And now you don't got to worry about the home maintenance of the house. Because a lot of older people, they get tired of that. My grandma just sold her house. I didn't even find out till my aunt told me. I was like, dang.
Dang. Why she didn't tell you? She didn't want you to know?
Oh, I know why she didn't tell me. Out of my auntie, I got this real estate agent. Grandma got this real estate agent. She know me. But yeah, she sold it. She sold it. Didn't tell me, but it's all good. But she did tell me the reason why. She was like, I'm just tired of the maintenance. I got enough equity where I can make a lot of money. And I was like, okay, cool. So I'm seeing that now. And then some not so older people, but like, the generation before millennials, some of them are just selling their homes just to rent, because they're like, hey, I can be, downtown, rent something nice. Kids are all grown. We don't really got to deal with the mortgage and owning a house. So that's what they want to do. But with real estate in 2021 is definitely competitive, very competitive. Even in these small towns, the demand is high. Um, for interest rates being so low with this pandemic, the pandemic is a blessing in disguise because it's helping a lot of people buy houses because the rates are so low. Um, and the cost to get a house, like the money is so cheap. Like the mortgages, the rates, like it's so cheap to get money right now. And I feel like it's really gonna be like that for the next 2 to 3 years.
Okay, 2 to 3 years.
Yeah, but you have to position yourself to be able to compete. When I say that, like especially in the Raleigh Durham area, a lot of first time home buyers, they're ready to buy, but they're not ready to compete. Meaning that's a lot of people moving down here from hot COVID areas such as New York, California. They're coming selling their homes for cash or just money to put over like $10,000 over the asking price.
Right.
When that first time home buyer's like, oh, what you mean? Like $10,000 over the asking price. So if it appraises for 210,000, I'm sorry, if it appraises for 200,000, but this next person, they willing to pay an extra $10,000 cash out of their own pocket just to get this house that underpraised, they gonna get it.
Yeah.
Yeah, so you gotta be prepared. You gotta be ready to play ball, but just position yourself. Like I'm not saying people, hey, it's gonna happen like overnight, but just pace yourself. Don't try to compete with the next man or hey, such and such got a house. Let me compete with them. It probably took them a year to get ready or 2 years. So just start now because rates are still low and builders are trying to build as fast as they can. I know older people are going to be selling their homes. So I say definitely get with a lender. You can get with me if you're in North Carolina, Virginia, South Carolina, and get with a real estate agent. You can get with me because I do have all the agents, the best agents in the areas to help you out, to just get you on that game plan. But the market, real estate is going to be good, and if you definitely want to make a career out of it as a real estate agent, it's definitely the perfect time to get in it. Because you can, real estate can change your life. Even if you feel like, I'm good with numbers, you want to be a mortgage loan officer, hey, my team is always hiring. So you can get into the business. So real estate right now, you can win on both sides as a buyer and as getting in the business as a home inspector, an appraiser, notary stuff, a real estate agent, a mortgage lender. Like real estate is not going nowhere.
Facts. Facts, and they're not making any more land.
Yeah, they're not.
You got to work with what we have. So Mike, to what you just said, realtors. Okay, let me make sure I say this right. So there is no more property. People have to move. Window shopping. So I know that in the past, people would be like wanting to go window shop when they say they're really ready, but they're really not ready. So if you've gotten approved for a loan, you have to understand you're not the only person out there looking. Especially here in North Carolina, like if you snooze, literally snooze, you're gonna lose because they didn't already roll on that offer. So the window shopping needs to be done like I'm ready to really buy. You've been window shopping, but now that you're ready, when you have your agent lined up, you have Mike as your lender, you need to be ready to write a contract, and I know he's not the agent, but you need to be ready to move forward because like he said, people are coming in, I've met so many people, it's like, oh my gosh, the house was over. It was always over the asking price. And I can name a couple neighborhoods like Mike know, Cary, North Carolina. Nothing in Cary is going to be at asking price. So you are, so I want you to talk about that, Mike, like, because I'm saying, like, this is, I was a former agent in another state, and I presented properties, was doing my piece, getting everything together, and then the person would go home and want to ask 5 more relatives that wasn't approved for anything, what should they do? And then the next day they said, well, I think I want to write on that house. That house is gone. Can you please talk about that?
Yes. So to all my first time home buyers out there, really listen to your real estate agents when it comes to putting the offers in. They understand the market. I know a lot of like my move up buyers, they trying to, sell their home, get back in the market, and they want to underbid. You can't do that. You can't do that right now. Listen to you, the expert. A lot of people feel like, oh, my real estate is just there to show me a house. No, they're your expert on the market. Your real estate agent can help you win a deal or lose a deal. If you listen to them, you're going to more than likely win the deal. If you like window shopping right now, don't call no real estate agent if you ain't ready. Don't even waste their time, because you're going to piss them off. And they're going to be like, okay, I showed John 3 properties and he ain't even pre-approved. Or he ain't even underable. So if you want a window shop, you could actually go to the open houses yourself without an agent. Or you could just click on Zillow and manifest it. Or what you could do, you could call me. I can connect you with one of my agents. And you can just have a conversation without looking at a house, but just have a conversation and learn about what's going on with the market. So now you can position yourself to be able to compete in the market. And a lot of first-time homebuyers don't even think about that. They just think about, oh, the house. Ask your agent, what's going on with the market? And the question is to ask, hey, what's the average home price going for? What's the average due diligence I have to put down? Are people overbidding on houses? What are the hot areas? What's the up and coming areas? Like, ask the important questions. The house don't matter. Somebody gonna buy it.
Right.
When it comes to also getting prepared, talk to your lender early. I say really you need to be talking to your lender 6 months before you even think about it, because the market is so competitive. Like even in Fayetteville, 2 years ago, Fayetteville wasn't really competitive. Like we was just out there. My agent, he was just out there. Hey, boom. We ain't really having to compete. Now he was like, hey, Mike, man, it's a new game out here. But he understood, and what he did was, and this is why it's great to have a good agent on your team. What he did, he came up to Raleigh-Durham and sat with an agent and learned how to compete in his market, because his market became like Raleigh-Durham. Mm-hmm. So you definitely want to be ready to play ball. You can't be scared to play ball. You can't be scared to spend that money. Spend it. The house is an asset, because home values are just going up and up and up, because everybody buying, because it's a low demand. So if you can get into a house, and if you feel like, oh, this house is not worth $270, today it's worth $270. Last year it probably was worth $250, or maybe even $230. But today, right now, it's worth $270. Somebody gonna buy that house for $270. Why not you? Because then what's gonna happen? That $270,000 home, it's gonna be worth $315. They're going up and up and up. So get into the game.
You're right, Mike. I'm listening to you. Thank you for sharing that and explaining for them to get prepared at least 6 months out. So area North Hills, I happened to drive by a set of townhomes, and I was just curious what the values were. The values were almost 500,000 now, but 4 years ago they was like 360, 370. And it's right there.
Midtown now.
Man, you know exactly. I was like, wow. I was with my son Xavier, and I said, Xavier, go to the auditor's website, pull this address up. And he was reading it. He was like, this house went up this much in 4 years. I said, and these people aren't going nowhere. They not, it's just crazy. So you all understand what he's sharing, values are gonna go up, even though they don't go up overnight, but they're gonna go up. Okay, two things, Mike, because I know it's pretty late, and I want to make sure we answer, Tasha or the other person if they have any other questions. I want you to share I know a lot of individuals who are self-employed, a lot of business owners, and so their situation isn't the typical W-2. Can you talk to that individual who say, well, I'm always having to get all my paperwork together, for them buying their home or investment property? Please share with that. And then the last thing, we're going to talk about tax money and stimulus money.
Okay. So when it comes to the self-employed person, hire a legit accountant or a CPA. An accountant can be like someone that handles books, because you want to make sure your books are managed well. And then hire a CPA that can manage your books too. You don't want to write off everything as a self-employed person. I know we love to write off everything because we're like, hey, I don't want to pay taxes. Here's the thing: when you're trying to buy a house or get any type of money from a bank, your business, they're going to ask to see your business tax returns. Mm-hmm. And if they see that, oh, your business ain't making no money because you write off everything, they don't care about, hey, what you say you made. When they see that tax return, and there's certain lines that they look for. And it's a private course. Y'all got to pay for that game, but it's certain lines that they look for and calculate when they're calculating your income. And if it shows negative or small, because they add up your income by 2 years and divide it by 24. If it's below, you in trouble. And instead of having Kiki or little Timothy and John do your taxes because they doing it for $200 or for free or TurboTax, really reach out to a CPA or a tax accountant that can handle your books. And if you need someone to handle your books, I can refer you to the person I use to manage my business. She's great. But yeah, you definitely don't want to write off a lot of stuff.
Okay.
And before, especially now, before tax season, if you think about buying a house this year, talk to your lender, me, with your accountant, and just let your lender see what you made so they can calculate your income and say, hey, this is what we have. Because you haven't submitted your thing. So, you and your accountant can talk, move some things around if possible. Or, show more income or amend your taxes, stuff like that. When it comes to that stimulus and PPP stuff, so right now, this is not my mortgage company, but mortgage companies across the world, like just the guideline. We gotta, if we see that if we see the credit pool within 120 days, we gotta pretty much ask you about it and count it against you. The monthly payment. Don't get me wrong, EDS and stuff, they're phenomenal loans. But you got to make sure you're using loans the proper way. I'm not a CPA and accountant, so I really can't talk too much about the tax stuff of it. But if you can get one, use it the right way. That's all I'm going to say. Use it the right way. Because it's really companies like small business owners out here that need it. And we don't need bad apples out here to mess these small business up. Because we have been seeing people, go to jail for fraud because they decide to lie about it. But, if you get approved for it, just use it the right way. Talk to your loan officer. But if you're self-employed, hire a CPA. Just don't even go to H&R Block. Don't even hire somebody that they do this for real, because what happens, you might want to buy a house after tax time.
Mm-hmm.
I have been in situations where the person went to H&R Block and we can't get in contact with somebody for H&R Block to give us a P&L statement. And I know, like, well, H&R Block is cheap, but business owners, we got to stop thinking cheap. It's a
That's
business.
good.
If you don't want to pay, like, be the boss, it's nothing wrong with working a 9 to 5.
That's a
Straight
good
up.
point, Mike.
A lot of people bash 9 to 5s. There's nothing wrong with 9 to 5s. I'm not a 9 to 5 basher. You hustle a 9 to 5 like you're the hedge fund manager. Work your way to the top, because a lot of people don't have to be the boss. Some people are not good at being a boss, but they can be good at managing the company, managing someone else's company. So if you are terrible at being a self-employed entrepreneur, work your way up to the 9 to 5 job. Work your way up to be the manager, to be one of the big bosses in the boardroom, and you can do it. So don't let social media fool you about, oh, you got to be self-employed. Yeah, you got to stick it to the man. No, you just got to be smart. You got to be smart. And technically, like, you really don't like have to be like my 9 to 5. Like, my mortgage business is really my 9 to 5.
Right.
Like, I'm 9 to 5, even though I'm commissioned, it's 9 to 5. And my investment business, that's my investment business. But it's real estate. Real estate is not going nowhere. Like, I know people that work 9 to 5s and they have a phenomenal real estate portfolio. And that's all they know. They ain't out here flashy, but they killing it with their real estate portfolio. So don't let the internet fool you. Don't let, people with, hey, I bought a Benz, I got Louis. Don't let that like fool you. Don't let them people stop you from getting to your bag and building wealth, because the game is to be played. You gotta play the game the right way. And a lot of people, they like shiny objects that are plastic and not worth nothing. You're gonna be the person that's worth something.
Wow. I knew you was gonna bring so many nuggets. I'm
I
like, we
tried.
2 hours in, and it's so
Oh,
much. What'd you say?
I said, well, I'm 2 hours in.
Yeah, we 2 hours in, and there's so much more. But see, this is where they need to come to one of your sessions. That's how we leave, because we couldn't even get it all in. This is like we would have to go take a break and come back. But
Yeah.
one of my friends from that live in Cleveland, Ohio, actually my college roommate, and we went to high school together. She said, "Thanks, Pat, for the invite. Learned a lot in a short time."
I'm great.
You dropped some real nuggets on here tonight, Mike. So if you would say, what would be like five just quick tips that people can take away, that you want to definitely want them to leave with? And also, I want to make sure I have all of your contact information, how they can reach you, all of your social media. And do you need to put your loan officer's number in the comment? We're not gonna have nobody coming checking on us, are we?
Nah. Compliance, I already said it in the video.
You
Compliance, y'all
did.
better leave me alone.
Okay. Yeah, I'm like, do I need to put that in the comments? But I definitely want you to give what's your top five. I put your top five passions, your top five things that you want people to take away. And then I want to make sure, Tasha, I still don't know who the Galaxy S10 is, but make sure, we answer any questions that they may have, because I really appreciate them.
That's
Thank you,
that's
Mike.
that's me
Yes.
and my husband. He's listening in.
Is this Tasha?
Yes, that's me and my husband. My
Oh, you and
husband.
your
He's
husband?
listening. Yeah, he just
Awesome.
listening in. He's at work.
Perfect. Well, Tasha, I don't officially know you, but I feel like I know you. You've
I
hung out with us all night.
Yeah, I actually stumbled on this. Somebody shared Mike's post about the house that whatever he put up, because I actually inboxed him and he sent me a link. And I start scrolling and looking because there's so many scams. So I checked things out, and I saw the flyer that you posted, and that's
Well,
how I saw.
thank you so much. And you know what? I'm grateful that you didn't pass by and say, you know what, this is another one of these things. I have a saying, sharing is caring. You don't always have to give a person money, but you can give them a great
Right.
resource, and how they apply can convert to money or change their lives. So, Mike has given us, like, I don't even know what he would charge for this. I can't even put a dollar figure on it, but he's dropped so many nuggets for us for free. For
Right.
free.
Yeah.
We were just having this conversation this morning about buying in I mean home buyers, and in our area it's so small and it's predominantly white. I don't even need to go. Our area is red. Should I put it that way? However, we were, and they go into our neighborhoods, and that's just always been a thing I've just looked into and never acted on. The neighborhood where I grew up, it's a lot of other people. I'll let you figure that out. Buying up our neighborhoods, and then it's charging so much for rent, and people, it's not affordable. And for our community anyway, and not meaning our community as a black people, but just in the town, the money here is just not here for the rent that they're charging. And
What town you in?
I'm in Grady County.
Where?
Grady County.
Oh,
What's
Lord.
I don't know. What
Pharaoh.
state is that, Tasha?
I'm in Georgia.
Okay.
Oh,
Okay.
like Grady County. I'm like, what is that?
Right. I'm like,
I
I ain't
told
heard
you
of it either.
I inboxed you before you got on the live, Mike, and
Tasha,
you
I'm be
sent me your
honest.
link, and I
It,
told you where I was.
it be so many people inboxing me. I sent that link out today to about 20 people.
No, I inboxed you right before you got on the live, maybe 30, 45 minutes.
All right, I inboxed that link to like 3 people before this live. But I got you though. Okay. I'm gonna go back
But
and look.
it's very, very small, very predominantly white. It's just, and just to see how, a lot of the houses that's going up, and it's crazy because I can just use one situation, which we had a family house that I was living in, and I actually moved out of it. And so, the city was, I guess they were doing this cleanup thing, and it was appraised, and the house wasn't appraised for much, but the land was just like 4,000. And being that it was just the family house, I would have, went in and redone it, and I tried to buy it. But like all of the people in the community, they want more than what it's worth. And instead of, me going where it was appraised at 4, I offer 5 or 6. No, I want this much and I want that much. So the city ended up ultimately tearing it down, which was a loss to the family because they were, homes that my grandmother's parents and sisters was living. But it's just the greed. And then when we don't get it, then they come into the area and, they buy up things. And I would just like to see it stay in the community amongst our people. You know, building the community is my thing. Everything is a business. Don't get it twisted. But just us keeping our community how it should be. And that's my total interest. I don't want to go across the bridge and buy. I mean, although it would be nice, but my focus is just rebuilding the community because our kids live there. So
Gotcha.
that's my full purpose.
Wow. Tasha, what is that your city, the town close to that we may know of a larger city?
Tallahassee.
Oh, so you kind of closer to Florida.
I am on the Florida line. I'm 30 minutes north of Tallahassee.
Oh, damn.
Okay. Wow. So Mike, you got her covered?
Yeah, I gotta find somebody that do that
Okay.
market. But yeah,
Well, my
you got
thing
my
is,
link. You got my link. I can talk to you and your husband offline and give y'all like the whole kind of play on what you guys could do. So that stuff won't happen no more.
no. Okay. Yeah, he said that. I mean, he's looking it over. I didn't. I mean, I looked at it. I glanced, but I let him read it because I don't want to read it.
Okay.
I'm busy doing something else. But he just messaged me and he was looking at your calendar with some dates or whatever. So he's interested in talking to you.
So
Great.
Tasha, can I ask you a question?
You can.
First, I thank you and your husband for hopping on and being a part of the Zoom. Can you give some feedback? Was Mike's information, Mr. McKenzie's information helpful? Can you provide some feedback for anybody that may follow, come back on the replay and watch this, later?
I think he was very informative. And if you listen and research, because he gave out some areas that I was aware of, and he went into more detail as far as like the different loans, the different steps in closing costs, refinancing, people that myself I know a little bit, but when there are areas that I hadn't heard of, and in his explanation, it was very clear. It wasn't me speaking of saying a tumor and then I have to call it hydrocephalic or waterhead. He's broken it. It's broken down. So it's very plain English. Nothing that you got to go and well, let's go research this word. You can follow along. And that was one of my other questions for him. I spoke with the girl, one of the ladies that do taxes here, and she mentioned the PPP loan. And I guess the loan officer that they were dealing with a town over, he gave the information that I don't know what's going on with this loan, but it seems to me that it's like everybody, if you have your LLC, EIN, basically you're qualified because they aren't checking your personal credit. And when he started saying, and that was my question in the beginning, does your business credit piggyback off of your personal credit? So he answered that. But listening to what's happening is the complete opposite. They aren't checking your personal credit. They're approving you based on whatever amount you have claimed on your taxes for your business last year. Then they're saying so much as the loans are actually, because of whatever's going on with this epidemic, are being written off to a cent, or there's a way that they can be written off and don't have to be repaid as a normal loan. And that was my question, and I had forgot about it until now.
I'm gonna be honest. When it comes to like the EDIL and the PPP, talk with your accountant, because that's what I do. That's how I be learning about this stuff. I call my accountant, and she just tells me what's what. Because I'm not licensed accountant or none of that. I know when it comes to the EDIL, they do pull your personal credit. They do like a soft pull to make sure you qualify. They don't tell you that. So some people they're like, oh, I got denied for the EDILs because they have terrible credit. The PPP, I really don't know too much about that because I did not get a PPP loan at all. I should have, but I didn't. I didn't even apply for it. But yeah, just talk with your accountant about that. If you have any other questions, I'm gonna tag my accountant in here as well on the comment section, her business. You can reach out to her as well. She can probably answer I know she can answer some questions for you. But she answers all my questions about that stuff.
I really appreciate it.
Any other questions, Tasha?
No, not right now. Look, I'll probably think of some after the line.
Okay.
Well, Michael, he welcomes you to reach out to him. I welcome you to reach out to me. I'm just a individual that love to bring great resources, and I believe that you shouldn't hoard great people or great information. If something has blessed you, you should bless more people. And so tonight, I wanted to bless everybody with Mr. Michael Mckenzie coming on and just dropping some information that, like he said, information that we don't really get. You get a 15, maybe a 30-minute consultation if you're lucky, and then you sent on your merry way to figure it out. So he's giving you, the real deal on everything. So, but thank you, Tasha. Mike, please share 5 things that you want people, if they don't remember anything else, 5 just key points that you would like them to take away.
Put God first, number 1. Number 2, don't settle for a no. Hustle for your last name, number 3, because it's all about a legacy. Number 4, will be hit me up. Hit me up all your lending needs. I got a whole team. I got a mortgage loan partner. I got a loan officer on my team as well. Shout out my team. Kay, she's my loan partner. Natalie, she's the other LO on my team. Shout out my Lacey, she's my processor. So I have a whole team. All my real estate agents. I even have real estate agents. I don't own a real estate law firm, but real estate firm. But I got a team of agents that I work with. So I'm one-stop shop. So that's number 4. And number 5 is I say play the game to win. Play the game to win. Build your own monopoly, your real life monopoly. Because a lot of people, take your $200 and remember, go. Real game. So that's really about it.
That's it. Man, you dropped so much good information. I wish we had another 24 hours and another 2 hours that we could spare. But what I want to share with everybody, well, I want to give shout out to your team as well. And the fact that going back to you saying, learn how to delegate to people and stop trying to be everything all in one, because really sometimes we don't accomplish things when we're trying to do everything. Whoever has a great skill set in one area, let them go be great, and then let the next person be great, and then you bring all that together and the whole team is great. So thank you for shouting out every single individual. I'm sure at some point I'll get to meet them, and once I get this other 5 on the state, I'm going to be part of that team.
Oh, you know it.
Yeah, I'm looking forward to it. So I'm super excited, that you came on. I do. This is another thing. I always say there's 2 or 3 things that I take away when I meet with people who are very next level mindset. So the one thing is when Michael told me, he says, how was I going to be a boss? And I had a terrible credit score. I couldn't even buy a house. That was the part. He chuckled and laughed, and it was like, but he said it hit him deep in his heart. That was the one thing. And then I remember last year, Mike, you probably don't even know I remember this. You did a seminar, and I forgot what all the seminar, I can't really restate your seminar, but everyone who paid for the seminar, they walked away with some great tips, and, you blessed them, but you blessed a single mom from all of the proceeds. You remember that? You forgot? You remember you told me that?
Oh yeah, I did. Erica,
yep.
She got a house and everything.
Wow.
Yeah.
Wow. So that was like people came to his session and they actually learned in his classroom. And he said, Patricia, I was just thinking, what was I going to do with the money? And he gifted, because she didn't know you were going to give her the money, did she?
She didn't know.
So this is segueing into your sessions. What did you share in those sessions? Well, not, the details, but, that was put together. What was that class for that you were able to bless that single mom?
It's really like showing people how to get business credit. That session was that. I do those sessions, on little splats. I did one, I think in December. I always do it in December. I'm thinking about doing another one maybe next month, on a weekend. Probably, on the weekend. But yeah, I was just talking about business credit. It was a deeper dive into it. It's pretty much giving all the knowledge that I know on how to qualify, how to use it. And out of that class, I want to say like so far, 75% of that class got business credit funding so far.
Wow.
Yeah, yeah.
Wow.
So a lot of them, they became like they're investors now. So they're buying their first homes. One of my guys, he brought like two homes. I'm like, man, like you trying to catch up with me? Yeah.
That's-
And then that single mom, like a lot of people go to these, like they pay these gurus on YouTube, IG, in person, but they don't really get to learn. It's always an upsell, and I never do an upsell at all. That's never my motto. I want to, if you're gonna pay me, because you're gonna pay me to give you the information. But at that particular time, I really wanted to bless a single mom. And my mom, I was like, hey, like, you know anybody single mom? 'Cause my mom, she raised me as a single parent, and she told me about Erica, and I was like, well, let me meet her. I'm gonna give her this money, and we had like over $1,000. I gave it to her, and she told me she was saving up money to buy a house. I was like, look, you ain't gotta touch none of your savings. Like your son can, you know, buy his Christmas stuff with this. We started talking about her game plan. A few months later, she brought a beautiful town home. Um, and now she's actually in the process of getting her license.
Wow.
Yeah.
Well, Erica, if you see this and you watch this, congratulations to you. Like when Mike told me that, I'm a very strong person, just naturally, but I have a deep heart. I love the underdog story, the person who came from nowhere and went. Like I love me some Eric Thomas. I love me some ET. Most people
Yeah.
here, they get tired of me talking about ET, but I love the person who started with nothing, lit, and they changed the game on people.
Yeah.
They changed the game. And so when he told me that, I was like, wow. He was like, Patricia, I didn't even know who. I just decided to bless. And just how Mike is so calm, he said, I just decided to bless somebody.
Yeah.
I was like, that's what's up for real.
Yeah.
So, Mike, that was a good deed. And I just want y'all to know, Mike mentioned his mom last. I really wanted to mention that first, but everything just kind of is reciprocal. It just all flows back. I met Mike through, I stopped somewhere and I had my TLC band, which is up there, to
Yeah.
lose 5 pounds in 5 days. And
Yeah.
he recognized it. And he was like, oh, you do TLC, that's what's up. But what I love about what Mike shared with me, he used to be a life changer business partner with Total Life Changes. But what was so deep and emotional to me is that he said, yeah, he said, I did TLC. He said, but I did it because I wanted my mom to be okay. And when
Yeah.
he was talking, I was like, wow. And so he told me the story of his mom was, can I share this, Mike?
Yeah, you can.
Okay,
Can.
because I have
You
to ask.
can.
I'm just, okay. So he said during this time, his mom was suffering, dealing with cancer. And he said, I got these. He said, I wanted my mom to just be straight. And I got these products and I just did it because, I wanted my mom to be okay. It wasn't even about the business, it wasn't about him making no money. And I had met him. I had saw the story. What was crazy, I had saw the story in one of our Total Life Changes groups. I didn't even know him at the time. I didn't know I
Yeah.
was going to meet the guy who put the story in there. And then when we met somewhere, and I was like, oh my God, oh my God, that's your mom. And he was like, yeah, Patricia. And so his mom, she just, she's fine, she's well, and so Mike has a genuine caring heart. He came on here to do this for me. I'm so grateful that he came on, and I just want you all to be blessed. When a person give you nuggets, you better have a notepad, you better have a pen, and grab these nuggets, because they're not giving out like this 2 hours of multi-million dollar nuggets. and he gave them to us for free. So, Mike, you have the mic. You could close us out. You could close out, Tasha and her husband. I thank you so much for being here. We have to do this again, and you said you're thinking of doing another session. Anything you want to share about that, please drop that information.
Yeah, I'll probably do another business credit seminar session like in March. Not February, but March. I am going to charge. I charge for all these sessions. This session is not, no American Funding does not have nothing to do with my business credit sessions or real estate business at all. It's a totally separate business. But if you all want to learn business credit and truly learn how to use it to leverage to get into real estate, be on the lookout for that. Follow all my pages in the link. And if you want to buy a house, contact me. It'll be an honor to work with you. You can work with the best lender, one of the best lenders in the Southeast, top 1%. So yeah, you can work with me. And yeah, just don't be scared to chase your dreams. Don't settle. I used to be there. I had a 458 credit score. Like
you crack me up every time you say that.
Yeah. Like I used to sleep on the floor and everything. Like I used to be homeless. Like I'm telling you, like so the information that I'm giving to y'all, I just want everybody to be wealthy because it is the more that we work together, the more we all can make money. And then, if you all want to invest in real estate, become a funding partner, that's just a conversation we can have. I love real estate. I love what it can do. It can change lives. I don't even drive a luxury vehicle. I drive a Ford Taurus 2008, but I own assets, baby.
That's right. Guys, I love that, Mike.
Yeah, so look, y'all have fun. Don't overthink it. Be blessed. Put God first in everything you do. And let's go from there.
Okay, thank you, Mike. So one of my TLC business partners, she said, yes, she is ready to buy a house this year. You have somebody out in Phoenix, Arizona.
Oh, I do loans out there.
All right, Peace, he got you.
Yeah,
okay.
I got you.
All right. Yep, that's one of my personal team members. So she just commented. So Peace said, that's what's up. Assets, baby. She like when you said that.
Yeah, assets. Look, and also y'all hit up Patricia. I know like people sell TLC, but look, hit up Patricia. She's a great leader. She has a team. I've seen her business grow. And the T, like she has a product, TLC product. If you don't know what it is, just hit up Patricia. It's a phenomenal product. It helped my mom with her cancer. It's a great product. Like it's phenomenal. Like Patricia, I need some more tea, by the way. Like I'm over
I got
here.
you. I got you.
I'm over
I
here
got
struggling.
You. I got you. I got you. Don't worry about that. I got you tomorrow.
Right now.
If you free, I got you.
Okay. So yeah, so hit her up. TLC is great if you all want to, figure out because it's all about having a side business. Because as we can see, the government don't care about us. It took them 8 months to give out another stimulus package. You can grow your business with TLC if you're not comfortable with real estate. Talk to Patricia. She has a phenomenal team, phenomenal products, and you can grow your business and change your life just by with TLC. Shouts out to Dexter, Scott. Like he is the man. Like I'm telling you, like it's some bad people, some real bad people in a good way. That's in TLC. Like just if you're looking to like change your life, TLC is definitely the product to go, and you can lose weight with that tea. I need some tea. I done gained some weight. Like I need
well, I got you.
Quarantine weight.
You know what? I did the same thing, Mike. I kind of put someone kind of, because our products, like you said, are so good. I kind of took it for granted, but I had to get it back. The only thing I'm gonna share regarding TLC is for anybody watching that don't know, and I know Tasha didn't know me. So I was the person from a teenager up until 4 years ago. I suffered from skin issues, blemishes, acne, the whole nine. And unless I shared photos, I had scars like blemishes, black spots, the whole thing. RT removed all the bacteria from my face. And, so the rest became history. It's almost like somebody took an eraser and just erased everything away. So we're riddled with toxins. And so I'm so grateful for our company. But I thank you, Mike, for the plug. It wasn't about TLC. You all we got to do something different. You got to get some assets. You got to get some property. Monopoly is my favorite game. Monopoly is Mike's favorite game. He who owns the most property controls things. You don't own anything. You can't control nothing but your mouth, but your body. That's it. So, Tasha, if you have anything you want to say before we close out, I really appreciate you being here.
No, but I appreciate everything. It was very informative and it was professionally done, and I really liked it. I enjoyed it. I'll be back checking in the next live. I'm always open for information, giving and receiving.
Awesome, awesome. Well, be safe down there in Georgia. We're going to figure out where Grain, Georgia is, Tasha.
Cairo, Georgia, Grady County.
Oh, Cairo. You call it Cairo?
Yes.
Okay. All right. I'm going to look it up. All right. Well, thank you all so much, Mike. We'll talk tomorrow. I got your tea for you. Okay.
Yes.
All right. Thank you for coming on, and everybody has, I know you put your links and everything, and you all reach out to Mike. If you don't catch this, if you came at the end, please go back and watch the replay. Go to Mike's website. He has you covered in so many different areas to get your finances in order. So, all right, Mike, thank you all. Have an amazing night, and I will talk to you tomorrow, okay?
All righty.
All right.
Thanks.
Bye. Bye, Tasha.
All right.
Bye.
Good night.
Good night.